And joining us now here on Market Talk as we broadcast live from the United Soybean Board February meeting in Nashville, Mac Marshall, USB's Vice President of Market Intelligence. Mac, good to catch up with you, buddy. How you
Hey,
doing?
always great to see you, Jesse.
Yeah, thanks for being here. Appreciate the time. We have plenty to talk about in the markets, and I think just let's get started. We had that February World Agricultural Supply and Demand Estimates report on Wednesday. You know, that February report, there's not really a lot that changes in that report. We expected it, but couple things of note. I know domestically we saw a cut to crush. I was a little surprised by that, and then we saw the Argentine numbers come down as well. And we know there's drought issues down there. So
Yeah, I think a couple things to reconcile. So one, what do you do with the drop and crush? It really just got rolled over into the expected carryout, but it doesn't really change our carryout position. We're still looking pretty tight and went from 210 to 225. So not a lot that we're going to be starting the new marketing year with if that holds. And it's really just a slight reduction to crush. But you said it. The more important I think market moving figure from this report was the cut to Argentine production. Now, their estimate is still substantially higher than what the Post has, which came out last week, says 36 million tons, which was pretty steep from the January number of 45 and a half. And you see a 4 million ton cut any WASDE, particularly internationally, and that does jump out. So it's reflective of the ongoing drought conditions. Argentina's obviously been suffering for a couple of years in a row. The other thing that I noticed just on the international balance sheets is slight uptick in those Brazilian exports. A lot of that attributable, I think, to Argentina needing to backfill its supply to keep its crush running at a decent capacity. So, importing more Brazilian beans than they typically would.
Yeah, and I think as far as that goes, watching logistics, I think is going to be a big thing there. How much can Brazil get down the Paraná River to Argentina? Obviously, they're having a few delays with harvest in Brazil, although we are pretty much confirmed that they're going to have a record soybean crop. So I think it's just a matter of what can they get down river to Argentina,
which is not something you can take for granted, particularly when you've had a lot of dryness. We ran into this, I think, 2 years ago, where our Paraná River was, at very, very low depths, much like we saw this last year with the Mississippi River. It really underscores the need for continued investment in infrastructure and everything that we need to actually bring product to market and help link buyers and sellers.
Well, I know as well, thinking about just soybean meal in general, obviously that market has been on fire. Even Thursday, up around $10 a ton, pushing back towards that $500 a ton mark in that front month contract. Man, oh man, this whole meal market as a whole is just screaming higher right now, Mac. It's been fun to watch, but I'm sure it's been a little frustrating to watch for some folks as well.
Well, over the last couple of years, we've kind of gone back and forth because we've seen this fundamental shift in that price and value relationship between meal and oil. Meal historically carrying 65-70% of the value, and oil 30 to 35%. Then you get to 2021 and you're closer to, I think, 42-43% for oil, and then 2022 closer to 45%. And then at the last month of the year, we have the announcements that come out about the renewable volume obligations, and just objectively saying that's a little bit different from what the private sector was certainly expecting and what the level of capital investment would dictate. And following that, we've had kind of this shift in the other direction, where those oil prices came down pretty substantially immediately following that announcement, and have stayed high 50s since then. Where a couple months ago we were in the 70s, and you've also seen that meal price really come up as well, just to kind of keep that value intact, because, whole beans as a whole, I mentioned it earlier, we've got a tight carryout. The world's looking relatively tight, still waiting for this Brazilian crop to come online. But as we look ahead, post-Brazilian harvest, as we look ahead towards new crop futures, yeah, we've got an inverted market, and we've got a split between, old crop and new crop. I think about like $1.30 right now, last I checked. But we're still looking at a really high price environment, and oil's maybe carrying less of that than it was 4 or 6 months ago, but that meal fraction is really, really high at the moment.
Well, and I think too, the meal side of the equation, I'm sure this might be some of the side conversations here during the meeting, thinking about our domestic crush capacity, all these different plants that are being built, getting ready to come online, looking out here, end of this year, next year, beyond, thinking about the renewable diesel situation and more. I know that's something that we keep hearing about and are excited about. Not quite there yet. It feels like it's going to be a few more months, at least maybe next year, before we really see that having an impact here, I think, in the US.
Yeah, and I think there's stages to it, right? I have to think about this over a continuum of the last couple of years. So I my orientation in time is at the start of 2021. That's when we started getting these waves of announcements, not of the crush facilities, but of the renewable diesel facilities. And when you start to see all those capacity announcements, it ultimately gets up to, hey, we might be doubling the market size as measured by announced capacity from about 3.2 billion gallons to over 6 billion gallons by the end of the decade. That's obviously very exciting. But at that point in time, in early 2021, that's great. Anytime you see a new emerging demand channel for the commodity in which you do business, it's incredibly exciting. But the fact is, you don't just grow soybeans and then all of a sudden you've got a biofuel, be it renewable diesel or biodiesel. You've got all these intermediate steps to actually bring it from field to turn it into energy. And the first thing that needs to be debottlenecked is expanding crush, right? I mean, we crush roughly half of our crop now, but if the more oil is going to be consumed in the energy market, we've got to find a way to produce more of it. So it starts with more crush. So this whole wave, I mean, I guess it's been chapters or somewhat episodic. And it was the latter half of 2021 we started having these waves of crush announcements that this felt a whole lot more real and less ethereal for me. And I think it's really underscored by, the players who are actually making those investments, because it's not just your ADMs or your Bungies. It's your ADM plus Marathon. It's Bungie plus Chevron. It's Phillips 66 plus Shell Rock. And it's the integration and coming together of, traditional energy or, extraction energy players in the oil and gas industry and traditional ag, and when you see, these two segments of industry, which have, traditionally not always been aligned, but they're coming together, seeing, a lot of the future promise and making large capital investments in crush expansion. I mean, we're looking at, total private sector investment in excess of $5 billion, just back of the envelope math over, what's been announced. But, to your point, there's still time for us to really uncover what's going to unfold here. And, again, going back to that oil point and how we've seen a slide in oil prices over the last 2 months, overall margins remain really strong right now. But as we look forward, 2-3 years, when margins come down from historical records and there's still planned crush expansion, does it still look as viable then? So, much like with the renewable diesel, you can't equate announcements with capacity, and you can't equate capacity with production. I think the same thing holds true on the crush side. It's very, very exciting to see the announced capacity. Anything we could be adding, upwards of a third above our existing capacity. So going from 2.2 billion bushels to adding another 700 and change, or metric, going from 60 million tons maybe to 80 million tons. Incredibly exciting. But that's some of that's predicated on the economics of today, and the economics of 2-3 years from now. Does that look materially different? So it's still an open question of where crush will finally land. We will see expansion, but the magnitude, I think, until you have the steel on the ground and until you've got confirmation of what's being done with some of the legacy assets, it's a moving target.
Do we worry at all with the China Brazil relationship getting, tighter? Do we see potentially China moving away from US soybean exports, and then maybe some of that demand is picked up by crush? Do we worry about maybe not necessarily losing demand, but kind of a net sort of, between that move between Brazil and China and then what we see here? Do we worry about something like that, or is that kind of unknown at this point?
Well, I think it really underscores the importance of market diversification and market diversification across a number of different channels. Certainly geographic diversification, which we learned incredibly well during the hard lesson of the trade war from 2018 to 2020. That was a time when, we lost a lot of volume opportunity for our number one overseas market in China. Well, China comes back in 2020. They come in strong, purchasing a lot of beans. But during that period where China wasn't as much of a viable market as a destination, our teams were working to continue to diversify the markets we were selling into. And you can take just a couple small examples, right? Ecuador, as an example. Large meal market. We ship over 500,000 tons of soybean meal there, particularly as we're likely going to have more meal coming online in the future. Looking at some of those markets where we have high share in meal exports, where there's a clear preference for U.S. soy, and there's growing opportunity moving forward for poultry, aqua, other forms of livestock. Ecuador fits that to a T, and that's a market that wasn't really material 5-6 years ago. So that's it's not the volume of China, but it's exciting when you can get additional placement and showcase and demonstrate that clear preference for a market that's got growth in the protein sector.
Sure.
Another example is Egypt. I mean, Egypt, people don't realize, I think, often that it's actually, on a country basis, our number 3 overseas market after China and Mexico.
See, I didn't know that either.
Right? Like, I mean, EU, if you think of it as a whole block,
Sure.
Egypt drops to 4, but still, top 5 market there, you wouldn't necessarily think of it. But, burgeoning poultry sector, a lot of runway for growth in the aquaculture sector. But you also have to balance that with some of the realities of today. Like, a lot of emerging markets right now are, under fiscal and financial pressure. So it's harder, to import raw commodities, particularly if your currency is weak or you have limited access to, international financing. And, a lot of emerging markets, because you've seen, the currencies of developed countries, get stronger as a result of central bank movements and interest rates. That's been a little bit more hard to manage, and maybe a little bit more sticker shock in some of those emerging markets. But 1 year, of course, does not make a trend. It does not mean that that's the environment we're looking at 3, 5, 10 years from now. And that's really the horizon with which we have to look, and that our farmers are having to look at this meeting here when they're coming together for the first time in their work groups to start building the portfolio of investments for this next funding cycle. And that includes, everything that we talked about in terms of market diversification, geographically, in terms of segment, meal, beans, oil. Going back to your question from before, that China-Brazil relationship. I mean, China's been buying a lot more whole beans from Brazil. China's set up to receive whole beans. Well, as we're bringing on more crush here, that pivots a little bit. So, we're potentially holding more whole beans back for crush. And, that meal fraction takes on a little bit more importance in export channels, because we'll be able to absorb, I think, a decent amount of it domestically, but there's still going to be, several million tons of incremental production likely that's going to have to go out through those export channels. So I think there's a lot of good opportunity in the years to come for, not just the U.S. soy industry. I think we're in a very strong position, but also for our stakeholders and customers around the world who, have ideally increased opportunities for getting to experience the attributes of U.S. soy. So a bit of a shift here, but I think the question that I get a lot particularly from international buyers is you guys are crushing more. What does that mean? Are you gonna run out of beans for us? And the answer is no, absolutely not. You look at the whole balance sheet, what we produce, what we crush, what we export right now. Even if we're scaling crush up by that full incremental growth and capacity, we still have literally tens of millions of tons of beans available for export, and that's before you even account for continued efficiency gains. I mean, like, base germplasm has rated genetic gains. Soybeans are continuing to increase yields year after year. So even looking forward, even if you assume flat area, we're still likely going to be producing more. So I think we're in a good overall shape here.
Final question before I let you go. Obviously, busy here during the meeting, having a lot of conversations, a lot of talk about investments and more. Your thoughts on just gathering everybody together here for a busy week during the meeting here in Nashville?
Well, it is that. It is a busy week. It's long days, but they're energizing days. And I think especially after the last couple years, 2020, even into early 2021, this is what I think our maybe 4th board meeting that we've had, post-COVID lockdown. Everybody's just so excited to be back together. And I know that that's a common theme throughout any industry, but in farming and agriculture, that face-to-face where you can actually shake somebody's hand and, discuss these investments in a real way around a table, hear from other farmers from around the country, and then me as staff help to provide the best background information possible so that they can make the best decisions. It's just so much easier, more fluid, and honestly just a hell of a lot more fun when you can do it in person, especially in Nashville.
Well, and I know it's always great when I get a chance to attend events like this and get to catch up with folks like you. And I appreciate the time here today, Mac, as always. And great to talk with you. I'm sure we will
Always.
talk again real soon.
I hope so, and much like with the board meeting, I hope we can do that in person again soon.
I definitely look forward to that. Vice President Market Intelligence with the United Soybean Board, Mac Marshall, joining us here today on Market Talk.